Hello. All right. We're here. We did it. How's everybody doing today? Good? How's the conference so far? All right? Yeah? All right, let's give it a couple of seconds for folks to get settled. Please come in, have a seat. All right, this is going to be interesting. So in the next 45 minutes, we're going to go through an interesting path. So it is nice to meet everybody. My name is Ricardo Taveras. We have my very good friend and special guest, Gregory Shepard, here on the stage with us. So in the next couple of minutes, we're going to go through a little bit of an introduction of myself. We're going to introduce Greg, and then we're going to go into a little bit of the ABCs of the challenges of growing a company, right? On this stage right now, myself and Greg, we've both ran companies in the past, both got into 100 million plus in revenue, So we'll tell you a little bit more about that. Don't forget to ask Greg about the company he sold to eBay. All right? All right, and then hopefully this is going to paint a little bit of a picture of what the future looks like if you're really going into this path, right? So just by the show of hands, how many people in the audience is an entrepreneur? Okay. Anybody that manages people? Yes? Okay, good. All right, so we'll go a little bit through this. All right, and then we've prepared a little, fireside chat. We're going to go into a little bit of detail about Greg's experience. There might be some difference of opinion about, how the company scales. So part of the reason to do this is because you get both perspective of, folks that have been in the founder seat of a company that is scaled, and then maybe, you'll get something out of this. And happy to stay up for questions afterwards. All right. So a little bit about myself. I can't tell you the name of the company because it's confidentiality issues, but I'll tell you, there's one of the companies I found, sort of co-founded and ran. We went from 400,000, sort of a proof of concept, right? 400,000 in revenue to $15 million in revenue from one year to the other, from 15 million to 77 million the next year, from 77 million to 200 million the next year, and right now we're about 300 million plus in revenue in total. The team grew from 0 to 500 plus in less than 36 months. So quite an interesting journey there, but I'll go through a little bit of the ABCs of what happens at every stage, and I'll try my best to put you in this founder position as I go through that. I'll do it very quickly, and then I would love to learn more about what was Greg's experience going through a similar journey, and then from there going into the fireside chat. Yeah. All right. Excellent. So Greg, tell us a little bit about yourself.
Okay. So I am first of all, I'm an autistic dyslexic person. So this is hard for me. So if I stumble or whatever, just please be understanding. And I say that because it proves that just about anybody can do what I did. When I started, I had nothing, and I mean nothing, like zero. At one point, I was homeless. I've built and sold 12 companies. I've won 4 private equity awards for transactions between 250 million and $1 billion. The book that you have on your chairs is from a 5-year research project I did on why, when, and how founders fail that I wrote to help folks like you guys. And I sold 2 companies to eBay, became the chief technology officer for eBay Enterprise Marketing Solutions, and then the CSO. And then I went into politics for 5 years and got to meet Barack Obama a couple times, which is kind of cool, really cool actually, probably one of the highlights of my whole life. And that's me. I did some other stuff. I did a TED Talk.
Amazing. Thanks for coming out, Greg. Craig is coming all the way from San Diego. I'm coming from New York, so we're sort of meeting in the middle here. Thank you so much for joining us, Greg. It's a pleasure to have you here. Looking forward to the discussion afterwards.
Thank you, everybody. Thank you.
All right. So let's go a little bit into what the journey looks like, right? So anybody trying to grow a company, either it's your company or you're joining somebody else's company, right? Or you're a part of a company that's going through this journey, you're going to face all these challenges, right? So pretty much you want to go through the process there. And the process basically goes from, when you just have an idea to having the proof of concept. Usually you make no revenue on that front. But then revenue starts to come in. And so what happens is you go from, I'll put myself on this side actually. So revenue starts to come in, and what happens is you go to product market fit stage. Usually that you get to about $1 million in revenue, depending on the business model, right? Then from there, about channel product fit is about 10 million in revenue or so, and then from there all the way up to maturity it can be anywhere from 50 to 100 plus $million in revenue. So usually there's a few iterations of growth and challenges along those stages. Okay, so what happens is, if you happen to have a company today that makes less than $1 million in revenue, or you're getting there, you're getting to the $1 million in revenue, there's only really two ways to do it, and I would love to get Greg's opinion on this after this, but there's only really two ways of doing it. Either you build it and then hopefully they come, or you ask around, they tell you what they want, and then you build it, right? Different ways. It's very important to identify that precise execution is the key at that stage. Don't hire experts. Hire individual contributors that would do the work. And it's really, really important that the execution is extremely precise. You have to know exactly what you're doing. If you don't know what you're doing, get together a board of advisors. And I mean, like, if you're running a B2C business, like, you need to understand how many backlinks should be in place, in what blogs to bring to your website, what the paid ads are going to cost you, how you're going to manage them. You need to know which influencers are going to talk about you, how you're going to reach out to them. You really need to precision in the execution is key. If you're running B2B SaaS companies, which I think I already met a couple of people that are in that boat, I mean, you really, really have to know. I mean, even the process of building the technology should have already a couple of people on a waiting list that paid you to even try it before you even come out of market. I mean, you really need to know exactly what you're doing. And if you don't have that experience and background, you need to get a board of advisor around you that would either help you get there with advice and precise execution advice, or would help you achieve the hiring of individual contributors that would help you get there, right? Don't underestimate the value of that. All right, what happens afterwards, and I mean, I can go into, you're running a platform right now that has about, a lot of folks in that stage, so I would love to get your opinion on this. Mm-hmm. But usually what happens afterwards is, okay, you have $1 million plus in revenue, okay? So what happens here is, this is time to make the first real investment in the company. Why? Whether it's your self-investment or you raise money from the outside. Why? Because you now probably have a vision, very clear vision, because if you're already making $1 million in sales, something worked. You may not know why or how, but something worked. Somebody wants your product. So you have a vision and you have the data. So most likely you know exactly who you need to hire, you know what you need to do, right? Probably the most challenging part of this, challenging part of this journey right here, going to the 10 million, is to organize the people inside of your company so that they achieve what they need to achieve. Because then, you go from having the individual contributors to having them manage other folks, and then it becomes a little bit of a structure, right? And so your ability to be extremely clear about the objectives they need to achieve, understand which both temperament and skill set you're putting into the positions of success to be able to achieve those, incentivize them properly with performance bonuses, performance evaluations, and so forth, is going to be key. And then how you organize them is your job. You're becoming pretty much a social engineer at that point, okay? That would get you to the 10 million. If they really know what they're doing, that would get you to the 10 million, right? Okay, a few things. Do not put money into professionalizing anything that doesn't make revenue, okay? You don't need a better product, you need a better sales and marketing team, so hire those folks, right? Speed is more important than perfection in this stage. Do not hire the experts that think a lot. You hire the individual contributor technical folks that can manage one or two folks, and they just basically act very quickly. Quick wins, speed execution. That's what's going to get you there. All right, next. Then you get to the $10 to $50 million challenge. I would love to get your opinion on that one, and I'm reserving my questions. So you get to the $10 to $50 million challenge. Okay, so what happens here most of the time is that now you got too many people. You got way too many people. If you're sitting on a founder company, at this point you probably have about 30 to, depending on how you distribute your team, you probably have about 20 to 100 folks already working for you. And usually what happens at that stage is that you realize, holy crap, there's more people than results. What's happening here? And so usually what happens there is that, well, you got too many people managing and too many people thinking and not a lot of them doing, and they're afraid to make mistakes. So really something that would drive home the execution is, one, a formal planning cycle, something that you start at the beginning of the year, you get everybody together, Everybody proposed what their OKRs look like. They all need to pick what's the budget they all need to pick what is the what people do they need that they don't have, like org chart stuff, and they all have to pick which technology platforms do they need, right? And so usually that becomes into things that every team proposes, and then you get in there and you approve, disapprove things, prioritize, and it becomes an execution mode. At the middle of the year, you usually have a review session. Everybody gets together and they get to sort of say maybe we want to change this on the objectives that we promised at the beginning of the year. Right, and then they want to change things about how the team is operating. But whatever they put on that middle of the year plan is, but at the end of the year, that's what you close with. So performance evaluation time comes. Everybody's bonus is depending on whatever you put in the middle of the year. It's very important. The effectiveness of your planning will drive the speed of decisions in the managers that are responsible to live with those consequences. All right. Also professionalize your HR and finance teams. It's very important that stage that you have a talent map, like this, so that you know how to manage folks around the company. Succession planning is very important. Career path, if you can even get there. Like in one of my companies, we were about 500 people. Every single person in there knows exactly what their next role is going to be, what they need to learn to get there. Whether they do it is their problem, because they have to take initiative. But they all know, like right now I'm at this sort of 60% of competence. I have a 40% of incompetence in my role, which is good because I need something to learn. But then if I learn these things on my free time and I put it in practice in the company and I show results, by X amount of time I'll be able to just have that position that pays this much. Let's go, right? And they all have a little budget that they can do, that they do, they pay courses with it, all right? So professionalize HR, and then really, it's at that point your biggest bet is people. Organizing them, incentivizing them, and moving them forward, mobilizing them, especially. That's going to be the key aspect of generating $50 million in that sort of growth, right? Because at that point, you don't achieve the revenue growth. People achieve the revenue growth through accomplishing their objectives. So crystal clear. All right, next. Then you already have 50 million. All right, at this time, you probably have already an org chart. You have a very standardized practices. The revenue comes in. You can sleep good at night. So what happens at this stage is, especially founders have a hard time detaching themselves from the business, delegating, and then really becoming visionaries. Delegating means that somebody has more authority about something than you, even if you're their boss. That's what delegating means. And so don't think about delegating as just putting something on somebody's plate and then saying how they have to do it. That's not delegating. You're just basically getting an assistant. All right? And so delegating, that's what that means, right? So you delegate, and you should, at this point in the stage of your life in the business, you should live about 6 to 3 years into the future. Now, what does that mean? That means that whatever you're working on right now, nobody should know about it, and it would either be a failure or a success, and we'll find out in 6 months. So very strong R&D, very strong financial planning. Very strong. And these people have to live with you. They have to sleep at night thinking about you. You have to think about them, because you should be living in the future. Usually at that point, you're pretty much glorified R&D shop, right? Because then, you're pretty much looking ahead into what's going to happen. You're buying companies. You're diversifying your financial resources. You're here to make decisions that will impact the future of the industry later. Now, what happens is that your job is pretty much a sort of a salesperson and a visionary, right? Because you first have to have a vision. You have to have a very strong practices of getting to that vision. Then you have to have a specific data about potential success. You have to make a lot of decisions along the way to either buy companies, hire specific people, set up projects, etc., to see whether that's going to work or not. And then is when you sort of, you put that into the prioritization of every team in the company to achieve specific things that for the company. And then obviously that's when everybody in the company starts executing that. As you continue to look ahead and live about 6 to 3 years in the future, as you sell the current vision to the hundreds of people that work for you. So as you can see, the main takeaway here is CEOs and founders, especially after $1 million, you're pretty much glorified recruiters. All right? You're as successful as the people you put around you. Don't hire experts at the beginning, hire individual contributors, build it bottom up. And then as you go, just make sure everybody has clear objectives. I mean, really, that's the most important, in my opinion, probably the most important part. Clear objectives, especially a clear incentive structure. Everybody's organized in a way so they can accomplish results, and then you're living in the future. All right, I love to unpack there. So I would love to ask Greg a couple of questions on this, and I'm going to take a seat now if you will indulge me. So, Greg, you are a specific case because you've invested in many startups. Some of them have done very well. You're building a platform now that I would love to you to tell the audience about that platform. You've written a book about this stuff. And you've gone through multiple paths. I mean, I've only gone through a few, but you've gone through quite a substantial more amount of paths. So walk me through your perception of the main challenge going from zero money to the first $1 million in your business.
I think, first of all, wow, that's pretty loud. Is that loud for you guys? Okay. From here, it sounds really loud. So I think the first thing is humility. Stay really humble and don't think you know everything. In fact, it's better to be, people talk about imposter syndrome and insecurity. I think that's a positive thing when you're building a business. It's really, really important to think that you don't know everything. Another thing is to understand who you are, right? So there's visionaries and there's subject matter experts. And visionaries look at problems from the outside in, and subject matter experts look from the inside out. So you have to understand who you are. Like, do you know a certain space, but you're not a visionary? Then you need a co-founder. If you're a visionary and you don't have the subject matter expert, you need a co-founder, right? In either scenario. I think understanding who you are and keeping humility are two really big things. I think another thing is to understand what kind of market you're in, right? If you're in a bull market, then people are buying things, right? So that means that you're after selling stuff, making money for companies. If you're in a bear market, it means people are trying to save money, which means people are building companies to try to save people money, right? If you're in a bear market and you're trying to sell a bull market item, you're going to have a hard time selling that product. So that tells you who you are, and now it tells you what kind of a situation you're in. So set and setting. Does that make sense? So now you have to stand back and you have to say, okay, I know this, what do I not know? And then there's the thing, you've heard the unknown unknowns and the known unknowns, right? You're not gonna, don't stress out about the unknown unknowns, because you're not gonna run into them until you run into them. It's gonna be on like some Tuesday afternoon driving down the highway, you're gonna get T-boned with a text or something, and you're gonna be like, oh, crap. I wasn't gonna say that word, I was gonna use a more powerful word. But then I think that that's really important. And then I think it's also really important that to your point, like understanding that when you are starting a business, you don't need somebody that used to work at IBM. One of the biggest problems when I did the research for the book that I saw was that you see this crowd of founders failing for the same reason, this 87% of them all failing for the same reasons. And it's heartbreaking to watch. When I'm looking at the data, I say watch, but I'm like looking at the data, and you see like all these founders come in and they're all failing for these common reasons over and over again. And one of those big common reasons is because they think that because somebody has some fancy resume, worked at some big company and graduated from some fancy school, that person is the person they need in that position. But to your point, that person is usually the kind of person that needs to hire people to actually do the execution, not actually do the execution themselves. So you end up spending this money for somebody who's going to go spend more money, which you don't have. Right. So you have to become the expert. You have to understand marketing. You have to understand operations. You have to understand all these things yourselves. And how do you do them? Well, it's like boiling a frog, right? It's not like you just jump in and you know all this stuff. And it's not like you can accelerate this process. You're living this process. But while you're living this process, you have to pay attention to what's happening you have to pay attention that you're learning. You have to realize and take note that you just learned something. I do a retrospective at the end of every day. I do a retrospective at the end of every month, and I do one at the end of every year. And those retrospectives allow me to look back on what I learned, to make sure that I don't hop over the things I learned so that I have to learn that mistake again. It's like a really important thing. I think that the obstacles that stand in front of somebody building a business, to your point, product market fit, right? Like,
Yeah.
do you, you know, I got to tell you, I have spent the last 4 years building a platform for you guys, for entrepreneurs. It's free. You can log in for free. It's on the thing. The book goes there. It's got all this stuff that I talk about and everything in there. It's absolutely free for you. It's my gift for everybody. And when I was going through that and I was researching the data, a number of founders that I researched, we're talking about 215,000 case studies, tens of thousands of interviews. It took me 4 years. The data that I found over and over, one of the packages of things that I see passing through is this sort of like underestimating what you need to know and overestimating what you do know. Over and over and over again. It's like common thing. Most founders are causing themselves to fail.
Yeah.
It's not the outside, it's themselves that are causing them to fail.
Fair enough. And I would love to get your input on this. So I often tell founders, don't raise money unless you have to. Okay, so in which case do you have to? If you don't know what to do, raise money. Because if you don't know what to do, you need to live. You actually need to buy yourself some time to make mistakes and then learn from those mistakes.
Yeah.
That's what money is for.
It's true.
And so, but if you know what to do, then just do the thing that makes money. And so, but on the contrary, you and I invest quite often in companies that are just zero, pre-revenue, I guess.
Yeah.
So, in what scenarios do you think having an investor so early is actually beneficial?
I think that if it depends on the product. If you're building a hard product versus a soft product, so like if you're building software versus hardware, if you're not an engineer and you don't know how to build the code, then you got to raise money to be able to do that. I've done both. I've bootstrapped and I've raised money in both scenarios. If I can do it myself, like service businesses, and you're a subject matter expert, don't raise money. Your valuation is going to be trash. Your exit value, you're talking maybe 3x top, maybe at the most, versus software might be 10, 15. So you can't afford to raise money if you're in a service organization. If you're in a software organization and it's SaaS and you see that you're going to get massive margins on the bottom line out of that, then you can raise money because you can afford the dilution in the value of your business and you're going to be able to meet the expectations of the investor. To me, if you are thinking, you can't fix a problem by raising money, but you can solve a problem by raising money. They're two different things. I don't know if that makes sense to people. But, because the difference is that you're aware of what the problem is and then you can solve it with money. But if you don't know what the problem is and you're going to use investor capital to figure out what the problem is that you're going to solve with your business, that isn't going to work out for you. That you'll get one round out of the investor, they'll walk away pissed off, and you're done.
So usually in that 0 to 1 stage, before you get to the first million, is probably where founders grind the most, because there's no choice, right? How did you balance personal life with that moment in time?
You don't. Yeah.
Okay, fair enough.
You don't really have a personal life. You just sort of work all the time,
All right.
How many of you guys work all the time? Yeah. Those are the ones that I like to invest in.
Fair enough. All right, so let's go to the what happens at going from the first million to the first $10 million in revenue, right? And what was your main challenge building a company to the $10 million in revenue?
I think that my personal main challenge was the same actually that I studied, which was weird. Because I was looking at the data when I was doing all the research and I was like, oh yeah, I made that mistake. Oh yeah, I made that mistake. Oh yeah, I made that mistake. It was crazy, right? To see it and just going dumb. But I'll tell you that when you look at the lifestyle, so the book goes through the life cycle of a startup, right? It goes from the very origination, from I have an idea to exit. And it does that because at different stages, and there's 7 stages in the life cycle. So it starts out with vision. You have your vision. You go from vision to product. It matches. His is a high level. This is like more down in the weeds.
Yep.
So you go from vision, and then you go from vision into product, you go from product into go-to-market. Each one of these things have like a pig's tail. They spin around. It's not like it's not linear. You go back and forth. Sometimes you stay in a stage for a while before you have the right to pass on, right, to the next stage. But after you go to market, a lot of people go to growth. And the problem with going from go-to-market and growth is that you haven't done standardization. What standardization does is it allows you to understand the way your business runs. By standardization, what I mean is that you look at how people are doing their job. I'll give you an example. For somebody to get from 0 productivity to 75% of productivity, it typically takes 6 months, all right? If you do standardization, I can do it in 30 days. Now, how much does it cost you to hire somebody? In the growth stage, 33%, a third of your cost is the cost of growth, that's headcount. Those two things come together, so you can drop the amount of cost it is for you to move from go-to-market into growth if you go through standardization first by documenting, doing best practices, which is just when something happened, who does it, and how do they do it. I'm not talking about an employee manual. I'm talking about literally somebody saying, I go from here to here. I click this and do this, and then I do this. Going through that process is going to highlight the problems. Those problems are inflated tenfold. When you go into growth, it isn't just your revenue that grows. Your problems grow too.
Yep.
If you don't identify what they are, you put yourself out of business. In fact, 57.1% of founders fail in the first 18 months from that mistake. They put themselves out of business because they forget that they have hidden problems that they're not aware of yet. And they skip over that stage and they go into growth. A lot of the times because the investors are cramming on them. Like, grow, grow, grow. Those investors don't have your best interest in mind. They have hundreds of investments. They want one of them to succeed. It has to be big because it makes up for all the failures. And they don't pay the consequences you do if you fail. So pay attention to yourself and your own business. Go through standardization and document the way your business runs. It will help you when you grow substantially. I'm telling you, it'll save you. It'll save you. It'll save your business.
And going through, especially the standardization aspect of it. Ooh. So, walk me through the best hire you've ever made in that stage. And walk me through the worst hire you've ever made in that stage, going from 1 to 10 million.
Yeah.
And because, as you say, like that is the standardization process. Usually, I mean, it's not just you. You need other people to also get involved with it. And
yeah.
So, can you give me some light? I mean, I'm happy to tell you mine, but
I think that you need somebody that's extremely organized. When you're talking about taking a company from go to market and spinning around trying to figure out what's going to work and go to market and then go into standardization. In the standardization phase, that person who eventually will become HR, but isn't HR right now, but eventually will become HR, at the moment are the people that are working in those roles. Mm-hmm. They need to be really, really organized, like really organized, and they need to be you don't want to hire the complications instructor for the IRS, right? You want to hire somebody who's like, who writes the simplest, most human, most conversational best practices that you can write. And it's just simple. Again, I want to tell you guys this again because it's so important. Please don't make these mistakes. The first thing is, a best practice is just a wiki. You just go get a wiki, an open source wiki, whatever. Each functional area has an area. Functional area, there's 4 functional areas in every company. You have product and engineering, you have sales and marketing, you have shared services. That includes anything that's a shared services. HR, IT, a lot of people argue with me about that, but it's a shared service. Yeah. Legal, all of that. And then you have the team that handles service and support, right? Those are the 4 functional areas. Why do you have those 4 functional areas? Because they call to areas in your financials, right? Growth goes to sales and marketing, service goes to retention, and margin growth, margin, retention. That's the only thing that counts in a business, growth, margin, retention. Now you have people in your organization that actually have numbers on their head that actually grow the stakeholder value of the business itself. Does that make sense? Those people drive everything. That's why you have the 4 functional areas. Product and engineering goes across everything, right? So now you have a structure. You use that structure and have those people in my organization, the one that powers the platform. They're the CEO of their functional area. Like you said, delegation isn't helping somebody. Delegation is counting on somebody, right? So what I do is I say, you are the CEO of your area. What do you do to make your area successful? What is your driver? Growth, margin, or retention, depending on where you are, right? So the worst hires you can make is somebody that's too much of a visionary. Somebody that's too, like those overcomplicators, you know what I'm talking about? You know what I mean? Like it could be done in a paragraph and they write you a 3-page email. You're like, calm down, dude, calm down. You know, so you know, that's sort of like my answer. Sorry, it was too long-winded.
No, I think this is perfect. So, you know, what happens usually when you go from in that stage of growth is that from 0 to $1 million in revenue, you're pretty much a pirate ship. So everybody does everything. There's not really organization.
So
like everybody's all over the place. I mean, you got one person doing 5 things, and it's fine. Everybody's having a party. You know, it's great. You got 10 people to do everything. It's basically a pirate ship, and then it's really a mentality shift to go from a pirate ship to more of a cruise. So, and when you standardize things to go from $1 million to 10 million, there is a cultural shock that happens, especially on the people that are just having a good time doing everything. Because now you have to incentivize them somehow to not lose motivation, into organizing their lives, delegating. And so what happens with these people is that they're so good doing what they do that 2 things happen. One, it's really hard for them to let go of the things they do best because nobody does it better than them, according to them. And also, they don't want to let go because they have fun doing it. So like delegating, I don't know.
And they get FOMO too.
Oh my, yeah.
You're like, and they feel bad. They're like, why am I not doing it anymore?
Yeah. And then they feel like, oh my God, I should be doing something else, and maybe I need to learn something new. Not really. You need to organize yourself. All right. So, walk me through how you drive culture to change the way people operate without really breaking the spirit of motivation and sense of meaning out of people.
That is the standardization process does 2 things. Or actually does 3 things. The first thing is it clears up what people are actually doing. Because the stage after standardization is optimization and then growth. Because when you standardize something, it points out what you can optimize. It points out where you can get better margin. It points out how you maybe don't need the people you need or the software you need. It reduces expenses. And when you go into optimization, what I do is I would sit there with the IT people and all the functional area leaders and watch somebody do their job. Literally I have chairs sitting behind people. Watch them do their job. And then you see them open up a browser, and then you see them open up another browser, and you're seeing these resets. The average reset time for a human being is 13 minutes, typically 15 minutes, which means that you only really have 45 minutes every time there's an interruption. So you're watching people for these resets. Add them up, it adds up, right? You're paying somebody a couple $100 an hour, $100 an hour, whatever it is. They have 15 resets in a day. That's a lot of time, right? So you start out by going through the stage where you're like sitting there and you're saying, okay, I have the standardization, now I want to optimize that. And that also includes, to answer your question, that also includes setting up what they call, when I did the book, I interviewed the Navy SEALs and the fighter pilots and the first fighting wing of the Air Force and the CIA and the smoke jumpers and all these places to figure out how they handle things when things go wrong. And one of the things that I learned from that is this concept of fire lines. Mm-hmm. They make sure there's nobody on the other end of their rifle so they don't shoot them, right? Well, this happens in companies all the time, you know, and you always hear somebody go, I thought you were going to do that. Well, if that happens once, then you got a problem with your standardization, right? Or if somebody goes, no, I got it. Well, is that in your firing line? It's not in your firing line, don't do it because you're on the end of my rifle, right? So stay away from that. So I think that the standardization process fixes a lot of that. Setting fire lines happens when you do the standardization because you have to say when you're setting standardization, what is the functional area? how is whatever's going to be done, and who actually does it.
Yeah.
Right? So now you've cleaned up a lot of that stuff, and you can not make those sort of mistakes. Those mistakes can be catastrophic, you know?
Yeah.
So
I agree. And so another interesting aspect there is, at least in my personal experience, I feel knowing what make people tick is a big driver. Like,
yeah.
I know my engineers like beer, so hey, there you go. Let's just get them drunk. Like, problem solved. I mean, obviously it's more complicated than that, but you know, you gotta really give people what they want. So, driving that cultural change to make sure everybody's, you know, behaving in a way that now, like, okay, everybody behaves, you know, in $1 million way, but now we have to behave in a $10 million way. And what's that $10 million way? All right, well, everybody needs a clear objective. Like, I need to get there, and if I get there, I will be incentivized by doing that, and I know what I need my people to do to help me get there. And okay, great. And then knowing what, you know, what every team is you know, is into, to put what they do outside of work, make them work. So if you know people are incentivized by just talking about specific topics and having drinks and going whatever, then when they're doing that, they're actually working. And so setting up environments when those conversations take place outside of the office and outside of the environments of the digital spaces when they collaborate is important. All right, so let's go, Greg. Let's jump into the future, right? So let's combine that growth path, like from 10 to $100 million.
Yeah. Now you got some challenges.
All right, so now, as Greg was absolutely right about something just now, I agree with you completely. When you grow, so does your problems. And so when you multiply your revenue, when you multiply the size of your business, you also multiply your problems by the exact same amount.
Or more.
Or more, it depends, yeah.
Depending on how you set yourself
There are different
up.
multipliers depending on the kind of problem.
Yeah.
Okay, so you know, going from 1 to 10 million, you know, everybody needs to start thinking in the $10 million way. Just you go through the standardization process, you go through everybody being organized, objectives. You know, you basically become a org chart designer, you know, and then you make sure. But going from the 10 to 100 million, where most of the time you got the founders that don't want to let go. Most of the time you got the individual contributors that became managers, that became directors, that also don't want to let go. You have sometimes, if the company grew too fast, you also have too many junior people in positions of power.
Yeah.
Most of the time, you also have a mentality situation with the people from the beginning that they couldn't just get out of the $1 million mentality.
Yeah.
And so, walk me through the main challenge going from 10 to 100 million. Like, what's the number one thing?
I think that one of the serious issues is, I call it pulling the thread. So you know how if you have a sweater or whatever and you pull it and then the thread kind of weaves through the whole everything. So the threads are pulled by the people in the leadership positions. And a lot of times the challenge that people have from stepping away is that they care.
Yeah.
They care about what's going on underneath. They care about what's happening. The CEO, the founder, everybody's worked so hard and they care about this so bad. And they don't have a path to affect what's beneath them. When you have layers and layers and layers of people underneath you and nobody wants to talk to you, everybody's afraid of you when you walk down the hall and stuff, you have a really hard time trying to affect something down inside the business. Do you know what I'm talking about? And it makes you feel powerless, and that gives you fear. And that fear makes you, instead of withdrawal, it makes you kind of dig in, and then you start disrupting people that are inside of the business. So you have to have a path to pull the thread. So you have to have a path to affect anybody at any level in the business as a CEO, as a functional area leader, whatever. Again, you can do that with the best practices. People get in the habit of doing things that are inside of the wiki, inside of the best practice, what I call a knowledge base. If you want to affect the change, you affect that and you push it out. And now everybody makes the change according to that new way of doing things. And now you can pull the thread. And then you don't have as many problems with people with fear of letting go or fear of like, it's not right. I wouldn't have done it this way. You know, I think that that's a really important thing. And I think another thing is that if you have people that are unmotivated, how many people have people that are unmotivated? It seems like there are people that are unmotivated and you can't understand why. Like, I pay them more. I bonus them. I'm doing this. I call it up and out. A lot of leaders will start to try to motivate people with money. That does not work.
Yeah.
Those are what we call coin-operated people. You don't want coin-operated people, because what you end up doing is you end up doing what I call up and out. You end up making them more expensive for your own self. You end up having to fire them because you can get somebody better for less. So you have created, with their cooperation, an end that isn't what you want or what they want. If you watch that same person, when they go home, they have hobbies that they're motivated about, that they do for free. If they're in a position where they're not motivated, then something's wrong with the position. You might have the right person in the wrong place.
Right.
You know, you have to look at why are they not motivated?
And also, I think founders, for some reason, founders tend to think that stock options will make people act like them. It doesn't work like that.
No.
First of all right, let's begin with something very clear. More money does not make people happy. In 3 months, they're going to run out of money
Yep.
again. All right? So more salary doesn't incentivize people to do what they need to do. Sometimes compensation at the end of the year would buy you some time, but even that also after 3 years gets old. There's nothing, I mean, emotional incentive and emotional motivation is probably the one thing that gets people.
Yeah.
I think I see a lot of companies sometimes play well with ideology.
Yeah.
And they really play that well.
Yeah.
And I mean, the CIA does this pretty well too. I mean, they really brainwash you when you're in there, you know?
Yeah.
So I think there's a lot of missed opportunity when it comes to building culture out of the incentive that, you know, people are just, they say they want money, but what they really want is a sense of purpose. It's a sense of purpose, a sense of meaning, a sense of belonging, some freedom, a little bit of affection, and yes, money.
And community.
In community, yes.
Yeah.
Yes.
I mean, you know, you've heard for birds of a feather flock together. When I studied these organizations, the ones that had people that were not motivated, it was like everybody, and all the good people left. Because motivated, high, intense people want to work with other people like them.
Yeah.
They don't want to work in that. So if you have somebody like that, you need to get them out or fix it. Because it's like cancer, it'll start to spread and your good people will leave and you'll end up with the B team.
Yeah. You know, Google did this right. If you take a look at Google's org chart in the first couple of years, pretty much everybody that was not type A, out. And you have a special amount of time to prove yourself. So what happens after a couple of years is that you're basically just left with the best. And what happens with the best is that they hire the best. And then, you know, over the years, I mean, they got the best folks out there. Greg, what is the one piece of advice you can leave the audience with today? And, you know, from a personal standpoint and as well from a professional standpoint?
I mean, this is going to sound like a shameless plug, but I would read that friggin' book. It took me 4 years to write it and 5 years of research. There's everything that's in here is in there. I would go to the platform. It's free. Log in. Sorry, man, whoever's.
Love it.
Log in and it's free. Like, just go nuts, right? It's all in there. If you like what's happening up here, there's a lot more there, right? So that was my gift. Please.
Yeah. And I will second that. Also, just to leave everybody with a little piece of advice as well. Well, two, right? One is, please read the book. It's actually a pretty good book. It comes out live in September. But if you've realized, for the past 45 minutes, the title of this is 0 to 100 million Masterclass, right? So everybody came here probably with an idea of, we're going to talk about money. And all we did was just talk about people.
Yeah.
Getting to $100 million in sales is pretty much social engineering. You're engineering the way people achieve results. And with that, everybody, I want to thank you for your time. Greg, thank you so much for coming.
Thank you. Thank you, everybody.
It has been a pleasure.
Thank you.
What a treat, man, to have you out here.
Thank you.
Thank you so much for coming out. And yeah, please, highly recommend going into the platform. What is the name of the platform, Greg?
Startup Science. On the cards that are on your chairs, or if people out there that are on the stage, you go to GregoryShepard.com, click on Visionaries, and then there you go.
Perfect. All right, check it out, folks. Thank you very much for everything.